Hey y'all, I hope everyone is doing well. So, as you guys have probably heard, mortgage interest rates are slowly climbing back up. They actually just topped over 5% for the first time in quite some time. So, I just wanted to hop on here and shoot this quick video to talk about what this means for you as a home buyer and also just kind of give you a quick forecast projection for the rest of this year as well as 2023. So, let's jump right into it. All right, so first let's talk about what this means for you as a home buyer. There are three things that I would like to kind of just make you aware of. Number one, with the rates going up to 5%, a little over 5%, we're not seeing them in the historic 2, 3s, and 4s anymore. So obviously your monthly mortgage payment is going to be a little bit higher than it would have been had you had closed on your home when the rates were just a little bit lower. So your monthly mortgage payment will be a little bit higher than before. The second thing that I wanted to make you aware of is that as the rates continue to increase, we are actually seeing that the buyer demand, the amount of home buyers out there currently shopping for a home and making offers, is actually going down just a little bit. And the reason is buyers that were pre-approved maybe back in December or January, and they haven't been able to find and contract on a home to lock in their interest rate continues to go up. And maybe when they got pre-approved, they were like, oh yeah, you're good to go, but your numbers are looking a little bit tight. Well, as the months have gone on, now the rates have gone up, well, buyers may no longer actually qualify for that home loan. So they may either have to significantly jump back in their sales price, which could cause them to look in another area, or they may just have to come up with more down payment money or pay some stuff off on their credit to get their credit score up. So that's something to be aware of, is that we're seeing buyer demand actually going down just a little bit as the rates go up. The third thing I wanted to make you aware of is that you're not locked into that mortgage rate forever. You can always refinance down the line. And just like everything else, some things fluctuate. It goes up a little bit, it may go down a little bit. So say you locked in today at 5%, and in a couple of years, you started to build up some equity and you've got some cash in there just sitting around. Well, maybe you decide to refinance. And at that time, maybe the interest rate is 4.5%. So not only did you just lower your monthly payment by getting a lower rate by refinancing, but you also find out that you have $70,000 in equity available and you wanted to do a remodel. So now you have cash that you can pull out. So that's another great thing to be aware of, is that sure, you may be at the 5% rate today, but rates could go down in the future and you could refinance that then and get that payment a lot lower. So it's just a long-term investment. You're not buying the home and flipping it. I would imagine that most of us are buying the homes right now to, live in and start to grow and get some wealth. And you're going to be holding it. So I think that's something to be aware of right there. All right, so now that we've talked about the three things that I wanted to just kind of make you aware of, let's talk about what the forecast and the projections looking like for the rest of this year and headed into 2023. The rates are currently 5s, but the economists are projecting by the end of 2022, they're going to see the rates slowly creep over that 6% mark. And they think in 2023, they actually seeing it going a little bit over the 7% mark, getting close to the 8% mark, and then slowly, steadily trickling its way back down a little bit. So I know it's super hard to save up money right now and get out there, and maybe you're not ready to buy a home just yet, but long term, you just need to keep in mind, if the rates do go up and up and up and up, you may go out there next year and you may be super excited, but your monthly mortgage payment could be really, really high and it may not be feasible for you. So it's something to consider. Not only do we project the rates going up, but also the real estate chief economists are projecting that appreciation is going to go up again this year, 15% by the end of 2022. And maybe 2023, it may drop a little bit, maybe 12% appreciation. However, you got to think about that. This year, if you were to go purchase a $400,000 home at that 5% interest rate, that home next year, if it does appreciate for the full 15%, that home next year, the same house, could cost you $460,000. You may also not get the 5% interest rate. Maybe it's 6. Now your monthly payment's gone up. You've paid more for the home. I mean, it's really something to think about. So I get it. It's tough to save up the money. It was really, really hard for me, but I just slowly did it and did it and did it. And I'm so happy I did because, now I'm locked in with this fixed mortgage. I don't have to worry about the rent fluctuating and maybe the rent goes up and, I don't own anything. So, that's our projections for 2022 and 2023. We're seeing 15% appreciation in home values this year. We're seeing rates going up closer to the 6 and then closer to the 7s and 8s next year. Maybe another 12% appreciation next year on home values. So it just makes sense to slowly start to save up that money and park yourself in and start owning a home. It may need a little bit of work, but it's definitely something to consider. All right, guys, so I really hope that this video provided some good insight to you. I'm always trying to just provide value and just kind of make you guys aware. If there's anything that you ever need, if you have any questions, just shoot me a text message. You got my number. You can hit me up on Facebook, whatever you want to do. I'm always here for you guys. I'll be looking forward to the next video. I got another one coming out. So I hope everybody stays safe out there. Until next time, I'll catch you later. See ya.